everybody. It's back. Great to be back at Tech Open Air. Come on. Fuck the pandemic. It's wonderful to be back. And well done to Nico and team and Kirsten and all the people who put this thing together. I love you guys. Well done. So, Sheel Mohnot, he's a fintech investor over here to my right, and I've got Jenny Fielding with Everywhere Ventures. First of all, what we need to do, I think, we'll do a little bit of a round of introductions so that you know what these guys are doing, what they're into. Especially if you're a founder or an entrepreneur, you should come and grab them after we come off stage because they're always interested in hearing from you guys. Ladies first, Jenny, tell us all about you and your fund.
Thanks, Mike. It is always so fun to be here with you, and great to be back at Tech Open Air. So I'm Jenny Fielding. I run a fund called Everywhere Ventures because we believe that innovation is everywhere, and we want to be where the founders are, wherever that may be. I spent many years as a founder making a lot of stupid mistakes and realized I might be a better investor. And so spent almost 8 years running Techstars in New York, working really closely with founders at the 0 to 1, and came up with the thesis for Everywhere, which is really about looking at companies globally. At the pre-seed, first money in. So we write, checks around 100 to 300K into that first round of funding, which we call pre-seed. Mostly the rounds are about $1 million. And as I said, we invest in companies, everywhere from Lagos, Nigeria to Sao Paulo, Brazil, and everything in between. I'm based in New York City.
Amazing.
Hey guys.
Great, go ahead.
Hey guys, I'm Sheel Mohnot. I run a fund called Better Tomorrow Ventures. We are a fintech-focused fund, investing globally as well. I also come from a founder background. I ran a payments company that was acquired in 2012, and an auction company that was acquired in 2015. And then I, too, ran an accelerator. 500 Startups had a fintech-focused fund.
I'm seeing a trend here.
Yeah, we have a lot in common that I ran until 2019. We started BTV. End of 2019, Fund 1 was $75 million, and then about a year and a half ago, we raised Fund 2. That's 2 funds that are total of $225 million, and we typically lead pre-seed and seed rounds as well. First check is between $500,000 and $5 million. Sweet spot closer to $1.5 million. And also invest globally. So we've invested in Asia, Africa, Europe, which of course we're going to be talking about, and the Americas.
Marvelous. Well, as the sole European, even though I am in English, I am.
Does that count?
I'm continentally.
Yeah,
I'm continentally European.
You're off afloat there.
I know that admittedly, being British, I have been dragged out into the middle of the Atlantic Ocean by a bunch of psychopaths called Brexiters. But apart from that, my heart is still in Europe, and even though I can't speak any other language, I can speak a bit of Australian. How about that? But I'm going to I might take the role here of the sort of the European, pro-European. And these guys aren't against Europe at all. They're obviously investing globally, but they are interested in bringing you all over to the United States.
I mean, it is the week of our independence.
Oh yes, you mean from me? From the Brits.
Yeah, from you, thank God.
Yes, exactly. Well, we gave that to you. We didn't need all of that tobacco and cotton. Anyway, moving swiftly on. The title of the panel, we were trying to figure this out. The title of the panel, Silicon Valley, Melting Europe's Tech Frost. Well, so there's a couple of ways of looking at this. First of all, there are a lot more American VC funds hunting in Europe. That might be a function of the bearish market. It might be the fact that you like European holidays. It might be the fact that it might be also that the European tech startups tend to be a little bit easier on the valuations than a lot of US ones. And we are in a bit of a bear market. It's pretty obvious to see. There's no IPOs going on right now, not many exits. A lot of VCs going, oh God, let's sell in May and go away, as we like to say in London. So where do you guys think are going, things are at the moment? Are we all sort of battening down the hand tricks and waiting for the markets to reopen in next year, or what are you doing, Mohnot?
Yeah, I mean, we've been investing kind of at the same pace we always have, but we're a seed investor, and the seed markets have been relatively open. Valuations haven't really declined much, and in fact,
Which I love hearing you say, because I've been fighting on Twitter with people about this, who keep on telling me that it's like devastation at the pre-seed and seed, and it's not really what we're seeing.
no, I wish. I mean, there should be more devastation than there is.
I'll just have to at you on those threads to get you
Yeah,
in.
add me in. So at seed, things have been consistent. At every other stage, things have come down quite a bit, and there was a delay between the U.S. and Europe. So when I came out here last year, or over a year ago, it felt like in Europe things were still like go go go. When in the U.S., starting probably February of 2022, just everything stopped getting done. We had a company that went out to raise a Series D in February. It never got done, and I think from seeing that in February of last year, we advised all of our companies, hey, it's going to be tough for the time being, and that time is probably like a few years. So this is the new normal. And what's been interesting is a lot of our founders did not get the memo, and some of them still haven't gotten the memo, which has been rather.
So they're wondering, yeah, I'm worth $1 billion, etc.
Yeah, off very little revenue, or certainly very little gross profit.
But I can't fire that team because it took me so long to hire them, and they're so awesome.
Yes,
Sorry.
It's always that. I couldn't possibly.
Yes. Jenny, what's your view about the subject?
So, like Sheel, last summer, actually last spring, it was a shit show in the U.S. really, and really people were feeling it. I went out to go raise our third fund in the summer, and I live in New York City. I have a pretty good track record and history there, and literally could not raise. And everyone's like, "Wait, Jenny, you know everyone. This is your third fund." It was everyone basically said, we love you, but we're overextended and no more early stage venture. I can put my money in T-bills and call it a day. So I came over here just to Sheel's point, and I was able to raise our fund in Europe. And when I asked folks, how's the environment here? Everyone said, well, things never got as inflated as they did in the US, so they won't be as bad. That was really what smart people that are really, good friends of mine were telling me in the tech ecosystem. So we raised our fund and we went back to the US. Meanwhile, probably, 3, 4, 5 months later, they call me and they're like, oh my God, it's so bad. So, to your point, I think just maybe 6 months behind what we really felt acutely last, February, March into the summer, where things, I think, were at their kind of worst. And so in the US, I'm starting to feel like things are opening up a little bit, whereas here, I've just been on a kind of 6-week tour through Europe, hit many countries. Mike and I have been to a bunch of conferences together. Still feels like things here are a little bit locked down.
Yes.
And then Mike, you brought up why is it happening? Why are these funds opening offices in Europe? And
what's your view?
Yeah, so I think there are a lot of Americans coming to Europe during the summertime. Jenny and myself, no exception. It's a wonderful place to be in the summer. But I think more importantly, I think the funds that are opening offices in Europe are just funds that have increased in size so dramatically over the past several years that they need a place to invest. And so Sequoia, Andreessen, General Catalyst, these are all now $5 billion plus funds. And if you're running a fund of that size, you need to continue to explore where you can find opportunities, and Europe is clearly a good one.
And it's just, yeah.
I would just add, I built my first company, actually. My co-founders were Danish, so we had an office 2008 or so. So I've been coming here, working here for a very long time, and I've never really seen as much kind of global thinking as I do now. And so I think that's also what is attracting a lot of the capital here. It's not just that there's an arbitrage or the valuations are better or they don't know where to put their money, although I agree with that. I also think people here, founders here, are building, global companies, right? Where they're, if they're a payments company, they're not just thinking about the German market, like they're thinking about a global market, and that's very exciting to investors like us.
Yeah.
Yeah,
Sure.
the mindset, the European mindset of 10, 15 years ago of first I'm going to build in France and then I'll expand, or first I'm going to build in the UK, then expand. That doesn't really exist anymore. That culture is kind of done. The new culture is we're going to, test our product, but we're trying to get international as soon as possible, that kind of thing. So it's exciting. But I suppose there's other aspects to this, is that Europe itself has larger funds now, very large decent-sized funds now in the UK that can go to series, beyond Series A to Bs and Cs. Still kind of a lack of growth funding in the Europe, but that's improving. Are you worried, for instance, that some very good European companies might just stay here and just not, put an office in New York and won't don't need the US investors nearly as much as they used to? What do you think?
I can't think of any company that hasn't so far. Like at some point, you probably do need access to the capital markets in the U.S. And
They can bypass us and go to Saudi.
Yeah,
maybe.
like the VCs.
Yeah. If they want to do that, that's totally fine. I mean, it doesn't matter to me.
I'm not sure they'll expand to Saudi that quickly. There's a sort of a bit of a joke going on in the VC land at the moment, is the Americans are coming to Europe to raise money for their funds, and there isn't any, and the Europeans are going to America to raise money for their VC funds, and there isn't any, but everybody's going to Saudi Arabia, which is a sort of interesting place to be at this point in time. But clearly, the whole scene has sort of improved. I think it's a bit of a reset. It's definitely a reset. It feels sort of 2007-ish, 8-ish almost. Maybe not as early as that, but at least maybe 2010 or something. What sort of are you worried, for instance, that some of the big tech platforms are so big now? We saw the launch of Threads last night. 10 million users as of this morning, probably 20 million already. Probably by the end of the day, it'll be at 50 million. God knows how big it'll be, because obviously it's running off the back of Instagram. You've got the big generative AI platforms. You've got Google's Bard. You've got OpenAI, ChatGPT. These are big foundational generative AI platforms that startups aren't really going to be find it as easy to play in that market, are they? What's your view?
Yeah, I think in generative AI, in AI there's like the language models themselves, and there's generative AI. I think on the models you need a lot of capital, and there are going to be a handful of companies. We probably already know who they are. And then there's applications, and on the application side, it really is so easy to build these things that the folks who already have distribution, I think, are for the most part going to be the winners, or folks who help those who have distribution. But if you're thinking that you're going to launch something totally new, like I saw something recently that was like a replacement for Microsoft Excel, and I saw it. This company raised money, and I was based on AI, and I was like, don't you think Microsoft, who invested billions of dollars in OpenAI, is going to have their own better version than whatever you're building? And people are already used to using Microsoft Excel. And so I think a lot of benefits go to incumbents because
But that startup raised money and they tacked the word AI on the end.
Yeah.
That's going to help them?
It's not going to work,
Not going to last.
Yeah,
Jenny.
it's not going to work.
I mean, we actually are interested in the application layer. We do a lot in vertical SaaS, which is, we don't say that we invest in AI, but all of our, vertical SaaS companies, it starts with the founder making their Google spreadsheets, and then they do an application, and then they get some intelligence in. And so we are very excited about the application layer. And just as in crypto and some new technologies we've seen, we don't believe that you have to be beholden to Silicon Valley or to incumbents, really, to play in that space. So I'd say that's where we're looking, and that's why, being here in Europe is exciting for us, because those engineers, those incredible engineering talent, those founders, can build off of some of the foundational generative AI tools and build some really impactful companies that are in specific verticals.
And but it's also interesting because it's a technology that was going to cut across lots of different sectors. And you specifically, man, are into fintech, and you've obviously done fintech as well. Lots of people talking about generative AI going to on-premise, which is why NVIDIA and chips and Oracle, bizarrely, are now suddenly worth trillions of dollars, because on-premise AI, because they want to keep the data inside the company, is going to become big.
It's like a bad flashback for me on that one.
It's a very, but yeah, servers. Oh my God, here we go, servers. Somebody has to go to the server room. Oh dear. But so that's possibly a new application for it. But let's talk about fintech specifically. How many more neobanks do we need? How many more embedded finance startups do we get? Is fintech still plenty of verdant open fields left to mine there?
Yeah. Great question. I think on the consumer side, clearly in 2020, 2021, we went wild with everything getting funded. And I used to joke about the neobank for pets getting funded until I literally saw a neobank for pet owners that did get funded. And it was totally wild how many different things that did not need to get funding got funding. But I do think some of those have done quite well still. So as an example, so the first company we invested in from BTV is a company called Unit. It's a banking as a service company, and a lot of these other companies are built on top of them. And they made it super simple to get started. So you could build your neobank for pets in a couple weeks and go live. But you'd be surprised, a few of these, primarily the ones building in the US for Spanish-speaking Americans, some of these have hundreds of thousands of accounts live and are doing quite well. But for the most part, it didn't make sense. We didn't invest in any of them. I do think this infrastructure layer still can be improved, and really I'd like to see fintech everywhere. Jenny talked about vertical SaaS. I think every vertical SaaS software should be monetizing through fintech. It starts with payments. So let's say you're a software product for restaurants. You can charge a monthly fee. Then you can charge for payments. You can also add in payroll. You can also add in accounting. You can also add in banking products. All these things combined are fintech products, but it's really kind of behind the scenes to the user. The user is just using this system of record, and
yeah, so it's
behind the scenes
it's an ongoing trend.
Fintech having a terrible moment in the public markets is actually, in my mind, a great thing. So I've been investing in fintech since 2015, have some of my best portfolio companies, and the last few years has been very hard for me to access fintech because we're very price disciplined, we're pre-seed investors, and I had people in my backyard like Andreessen basically going to any founder with a fintech idea and saying, here's $1 million, uncapped. So it's very hard for me to play in a space that I believe in. So now, to your point with the reset, now people are a little bit down on fintech. I think, public sentiment is down on it. And so it's a great time to be investing. So at our fund, we're excited about these long-term verticals or the impact that they can make. We're not really worried about the cycles as much. So I'm actually, in our new fund that we closed last summer, I think at least 50% of the deals we've done have been in fintech.
Well, that's fintech. Now let's do a little couple of minutes on Web3. Now Web3 obviously had a big boom and bust. There's a guy in the audience, Reg Snodgrass over there. Stand up, Reg. He's building a crunch base for Web3. check out Reg's thing called Edge-In. But Edge-In is, a Crunch-based Web3, and that's, Web3, feels like, generative AI. Oh, God, who cares about blockchain and crypto anymore? It's all about generative AI. And so suddenly, if you were a Web3 entrepreneur, I was here, Vitalik Buterin was speaking in a hall very like this 10 years ago in Berlin, and it was like going to a rock concert. It was unbelievable. And now a startup coming to an investor with a Web3 idea, hey, we're building on Ethereum, we're doing parachains. What are you going to say to them?
Same thing I've always said, which is I don't really give a damn. Just tell me what problem you're solving. So it's the same thing I think about AI is, how are you solving a problem for a customer? Talk about the pain point and the impact.
You're not slamming the door in their face?
No, I mean, we believe in them as underlying technologies in the same, in the same way, but we want to understand the use cases.
Why not?
So I feel the same way, that show me the use case. I think what's overwhelmingly happened with Web3 is you have like arrogant founders who don't have a use case and expect some crazy valuation. So in almost every case, we looked at, we looked at hundreds of startups in 2020, 2021 in the Web3 space, thinking like there's got to be a use case here. There's so much capital going into it, really smart people investing behind it, and we dug into all these companies and we could not find a single fucking use case. And everything that we were told, this is making this thing better, yes, but it's also causing 7 other problems, and it's barely making that thing better. So we looked hard. We want to be believers. We just can't. Like, the only thing that has made any sense has been investing in it as a speculative asset, so Coinbase and those kind of things, or investigating those people, Chainalysis and others.
Yeah, it's been a very interesting wild ride for those guys. Right, everybody, it's now going to do some questions and answers, and I'm going to run the. I'm going to run this. You want me to read it from here, or I can do it like this as well? Our AI starts. Oh, which one should we start with? Like here. I'll leave you the power. Okay. Okay, we've got some good ones here. Aren't tech values and Saudi money incompatible? Try saying that in Riyadh. How would you recommend that new young founders stand out and establish credibility when looking for VC investment? What's the best way of establishing credibility for you guys? How do you look credible?
I think just like knowing your shit cold, like knowing your numbers, knowing your competitors, knowing about us, all of that stuff helps establish credibility.
Yeah, I'd say, paint a picture of the world that doesn't exist and be convincing about that and support it with data.
By the way, on Saudi money, Saudi invested in Twitter with Elon Musk, so they're clearly compatible. Are you currently investing in crypto projects? We covered that just now. What's your take on the latest Sequoia restructuring announcement? Sounds a bit deep dive. I don't know. What did they do?
Yeah, so they split up their China and India funds from the main fund, and I think it was a long time coming. LPs were unhappy, so they grouped everyone into the same big fund, whether you're doing publics or not, and LPs were very unhappy with it. So I think this coupled with underperformance from some of the other portfolios made sense just to decouple it.
Did you guys, when you talk to European startups and founders, do things like regulation and GDPR ever come up as a kind of a cooler or a slower down on what these guys are doing, or you just don't care about it that much?
I mean, we both invest a lot in highly regulated industries, so we're not really worried about it, and we're excited for entrepreneurs that are solving those problems.
Yeah.
Yeah. I think, don't worry about it. Just get a lawyer and just get it done.
It is annoying, though, for you. I mean, I hate having to click on all these pop-ups every time.
Oh,
and it's worse when I'm in Europe.
So annoying.
Does it really solve anything? I don't think so. Nothing at all. And it's just because the European Commission is full of absolute idiots who don't understand technology. I'm going to go and beat them up. What do you think on the energy plus AI field? Energy and AI? Who asked that? Who's that person? Maybe they're not here. Explain yourself.
What's energy and energy plus AI? Shout. Stand up and shout. Yes, you're from China. You've been in Europe for 5 years. Well, yeah, but what's your question? Automates energy like you mean nuclear power or something? Maybe. Can we
Not
make,
my sphere of
Above my pay grade, sorry.
I think probably, well, let me help you. I think probably the answer will be that we can use AI to make things more efficient, so we use less energy, or eventually we'll hopefully make things to make, nuclear fission, and we won't need the Saudis anymore. So is that everything? Have we done everything? But I think we've covered it. Do you want any more? Anyone else any one of the shout-outs? Quick shout-outs, you good? What's? A couple more here. There's more? Do I have to look at something else?
Let's X out the ones we've answered, maybe.
Anyone want to do a quick 2-minute pitch?
Well, there's this one that got automatically flagged, but I think it's okay.
Did I read out anything wrong?
There's just there.
No, we've done it. How to spot a cow bullshit?
Shit?
How to spot bullshit in elevated pictures?
Yeah.
That's it.
Oh, that's really easy, surely.
Well, I feel like there's, it's hard. It'd be interesting to train a model on it because there's so many things that we see all the time that is obviously bullshit. For me, I really hate when people talk about things that don't matter. And so there's any list of things that you can say that don't matter, like I've won some award from a magazine, or like if they lead with any of these things, I'm automatically uninterested. Like, show me the fucking money.
One question I actually have for you guys, and then we'll get off the stage, is there's a lot of VCs claiming to use AI and data sets and machine learning to find startups for the future. What's your view on that strategy?
I think it's all bullshit. So like every fund that has claimed to have a data science department that does this for them, they've all underperformed, according to some of our LPs.
Yeah.
So like this has been going on for a long time. And then, a lot of later stage funds do have teams that tell them when to approach a startup. One of our companies recently, it's like a Series C plus company, has a lot of traction in the App Store. They had like 4 or 5 of the big funds reach out to them all within the same 2-week period, saying like, our proprietary data science platform told us to reach out to you.
Yeah.
And it's like, if it's proprietary, why did all the other ones say the same thing?
Oh, right, haha.
Basically, Sheel and I are going to have a job for a little bit longer.
A little bit longer,
It's
at least.
fine, it's fine. Great, well, thank you very much,
Thanks,
everybody.
everyone.
Mike from Techcrunch. See you later. Have
Thank
a good
you.
day.